Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com. Welcome back, everyone, to Real Estate 360 Live. I'm your host, Ryan Sloper, joined today by my guest, Louis Cammarosano, the general manager of HomeGain. Reminder that the show is designed to build the Washington, D.C. Metro's market by giving you good free advice. If you ever have any questions, concerns, or real estate needs, the best number to reach out to us is 877-245-2030. That's 877-245-2030. That's the number to call if you're interested in buying or selling a home. If you're looking to get your credit fixed so that you can put yourself in a position to potentially buy a home, if you're looking to refinance, anything that involves real estate, if I don't know the answer, I will personally put you in touch with a person or professional that can. 877-245-2030. So there's been some interesting revelations coming by the way of FHA that they are contemplating potentially waiving its current 3-year foreclosure waiting period. Now, what that means is that the current guidelines that FHA has is that, if you short sale your home, basically where you've strategically defaulted and just walked away, or been foreclosed upon, or went into Chapter 7. Chapter 7, you must wait 2 years before you can become eligible again for FHA-insured financing from the date of your discharge of that Chapter 7. For short sale and foreclosure, you must wait 3 years. Well, they're proposing, and this is supposedly maybe within the next 75 days, that FHA is expected to change its purchase mortgage guidelines to allow home buyers with major derogatory credit events in their recent history, a la the foreclosure, short sale, and bankruptcy, that they can then turn around and buy as soon as, tomorrow. Now, I see a couple major problems if this were to actually be the case. Number one, I can't possibly see that somebody that went through with a foreclosure would have the credit scores to qualify them for that type of mortgage. But number two, it could really set a precedent for people to want to strategically default and or foreclose on their home. Would you agree, Louis?
Well, I agree. What's interesting is this just could be the first step in a 2 or 3 step government program where the FHA, relaxes their requirements for insurance, and then the loaning entities do the same. The danger here is, the FHA is the only government agency that operates from self-generated income,
Yep.
Which means that it does okay. Well, if you start guaranteeing loans that are bad, you've got the housing crisis all over again because people are going to default, and what will happen is the FHA will lose money, and guess where their hand is going to go to when all of a sudden they start to lose money?
Yep.
Bailout back to the taxpayers for a bailout. And, you can't blame the people for wanting to take advantage of these programs. If they do, well, you get the tragedy of the commons where people know it's not necessarily in the best interest of the country, but in their best interest to get whatever handout is coming their way. And that's what could happen here. The FHA decides, look, we'll guarantee loans. Well, then the lending entities that are sponsored by the government will start making the loans to them.
Yep. Yeah, and it's interesting because a lot of what's going on and talked about for the upcoming election is how real estate, how everything's coming along because interest rates are great. But
you're pushing again artificially people who should have no business buying a house now since they defaulted. You're artificially creating new lending standards. Well, this is part of it by saying, look, we'll guarantee these loans even though no one in their right mind would lend them. And the way that we've done well over the years is by, making sure that we're guaranteeing the right types of loans.
Yeah, and it's almost like it seems a way that the government can try to find a way to continually to prop up the real estate market by allowing people that couldn't otherwise qualify before now qualify to continue buying, and maybe, by letting people take advantage of these low interest rates would have, the consumer happy again.
Debt permeates everything the government does. They figure if people can't afford something, we'll loan them money. If the government can't afford some benefit, they borrow money. So here's a case where they're saying, well, what's the problem? There's a lending standard. Well, that's preventing people from borrowing money, well, we'll guarantee it. Don't worry about it.
Yeah, I mean, and I'm going to follow this issue pretty closely because obviously they said that this is a potential change, guys. So, make sure that you're hearing me correct. This has not gone into effect. It's just something that's being talked about. And potentially within the next 75 days, there could be some sort of mortgagee letter that comes out from FHA that relaxes this current requirement. I will keep everybody up to date as I know more.
Right, these are FHA insured mortgages. Then the question is, who are the lenders that would be foolish enough to lend? Well, they would be foolish if the FHA says they're going to insure them.
Yeah.
You might as well make that loan if it's insured.
What's interesting, Lewis, is that over the last 6 to 12 months, though, these mortgage insurance premiums that are charged by FHA have been going up, and there's a reason why they're going up is because if they have more, they're bound to have so much money in excess reserves that once that they are not at that point or getting close to that point, the only way that they can recapitalize themselves is to raise up the premiums. So who pays the price for that? Well, it's the buyers, people that are buying homes that are going to have to take out these new loans. So I can see this happening all over again. They start to lend to people that probably shouldn't be qualified to get a mortgage. They get one. People start to default at a higher rate because they're less qualified to really even have a loan. And FHA has to continue to keep propping up the insurance higher and higher.
Or if they have enough losses, then they won't even be able to raise the insurance rate high enough. They'll have to get a bailout.
Yeah, which we know the Fed would be. It's like an open checkbook there.
Look, the AIG, they got bailed out. Now they're going public. The new model now is like GM. The government bails you out and then resells the shares back to the public a few years later. Yeah.
Why I find this almost comical is because there's been a lot of rumblings lately about when are the mortgage requirements and underwriting guidelines going to become a little bit more lax? And I always tell people it's only a matter of time. Right? Well, this is one of those cases that, the government is going to eventually find a way to try to institute some sort of program. This could be, to me, this does a lot more harm than it does good.
Well-intentioned, but, it's
right.
Not how the economy works.
Yeah, and then so we have people now that are still paying their 6% interest rate that they got years ago that are really trying to make ends meet and have been for the last 4 or 5 years that, if this new rule were to come into play, they would say, you know what? Well, if I could turn around and buy again tomorrow and I could short sale without missing my payments, then why don't I just do that?
Sure, you create the moral hazard, and then you're also giving a gift to the people who, went into bankruptcy, had a foreclosure or a short sale, and then they're back at the, it's like giving an alcoholic another free drink.
Yeah.
I mean, they really should be rebuilding their credit and waiting the 3 years and showing that they're credit worthy instead of saying, you know what, the government says it's okay, they're going to guarantee my loan, so I'm going to buy again if it doesn't work out. Hey, here's the question is, what if it happens again?
Right.
So are they allowed to come back right away again?
Well,
there's no limit to what bad credit is, and you can continue to get credit issued and guaranteed by the government.
Well, I would think that they probably have a million different little caveats to this thing, and it's just kind of being brought out there to prop up consumer sentiment again and get people a little bit happy that hey we might have a chance to buy a house again. We're not going to have to wait 3 years. I feel like everything is timed the way the government wants it to be timed. I mean, because I don't see where, we've really turned a corner as far as, over the overall real estate market for them to really warrant wanting to come out with this type of program. I thought we were just starting to clear out a lot of the bad loans that were out there. Now, granted, there's still a ton more that are going to be coming to the market, and this is going to be a trend for the next 5 to 10 years, in my opinion, probably more towards 10, 12 years because the employment situation has not really changed, okay? So that means the amount of income people are bringing in to make these payments is not changing, and I believe there's some crazy statistic that even the people that do have jobs are only making it's like 50% of the population that have taken and gotten a job are only making like $14 an hour or less. It's a crazy statistic, but how can those people afford to buy, and maintain a mortgage?
Yeah.
They're not going to be able to. However, I think that it's better to come out with mortgage programs that actually benefit people that do have the capacity to repay their loan, like the stated income loan that there used to be for self-employed borrowers that are willing to put down 25-30% of their own money. Those are the loans that make sense. Those are the loans that could prop up the real estate market for the high-end homes that you're talking about that are, $600,000 and up into the multi-million-dollar range. Those people are the ones that I would assume that, the Wall Street and lenders and whoever else should come up with the programs that can help them get the loans. Because that would start to clear a lot of the excess inventory in the higher range out. I mean, I feel like that a lot of the inventory that's sub, 400,000 is really moving, especially in the DC metro area. But I feel like that those are the type of programs that the banks should look to do, because they could actually take and instead of lending out at 4%, somewhere around there, they could say, yeah, there's some risk because the person's self-employed there, but they have 12 months reserves in a bank. So instead of 4%, how about we lend at 6%? That's a win-win for the bank, and it allows for more inventory to be cleared out.
It makes sense, Ryan, but I think you're talking specifically the D.C. metro area, and that type of program would really, what is the average median home prices in the 200,000? You really only see these jumbo loans and larger houses in the D.C. metro area, the northeast coast, and the west coast. Yeah, I guess it's not a large enough market for someone in government to make a big deal out of.
Well,
and also it smacks of helping the wealthy.
Sure. Well, but you bring up a good point there too, Louis, though, because there's a lot of people that are in some of these areas that are maybe, let's just call it a $200,000 house, though. Same situation. We have a self-employed borrower, right, that's got ample money in the bank that's wanting to buy, but because they're having to show, that tax return that doesn't read the way it wants to, but they've got like 30% to put down and 12 months reserves, that person still can't get a loan. You know what I mean?
That doesn't make sense.
It doesn't make any sense. I mean, but we see every day that people have got millions in assets. They're asking for a $200,000 or $300,000 loan and they can't get it because the lender's inclined to say, just take your cash and use it. I mean, that's a win-win situation for the bank, but they continue to do that. Banks don't really make sense, but that's just the way things are now, and I feel like that stated program could even help in the lower end of price ranges.
You're right.
We're coming up on a break. When we come back, Fed Chair Ben Bernanke gets an ultra-low mortgage rate. He refinanced, and we'll let you know the details when we come back. Stay right there.